This is our Forex blog for March 1st, 2012. And like most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. We have the real-time strength or weakness in histogram form, bar by bar in the top. Then we have the daily, weekly, and monthly trend. Ideally, it's best if a currency is showing incredible strength, like the pound, if the daily, weekly, monthly trend is also up. Same thing with the CAD, for the most part, the Australian. And if you trade every day, you realize that the New Zealand has also historically been very strong, but it had a pretty decent pullback day, which is enough to cause some of the longer term trends to slightly change. It went back to the positive side at 6. Knowing how strong the New Zealand was, and in fact about a week and a half ago, it was the strongest of all the currencies. When you see strength coming back into it, the buyers are back, and you can continue to trade that. So you want to trade the Australian, New Zealand, CAD, and pound against the euro, which is weak on all time frames, the yen, and the dollar from about 3 to really about 7. You see some strength here followed by less weakness. Usually that strength will continue. Once you see a lot of weakness followed by less strength, if the longer term trend is in the same direction of the last momentum move, that's likely to come back. You never know how long the strength or weakness will last, but if all the time frames are up, like in the CAD, you can see it was strong from about 5:30 till about 9:10. So you had a nice 3.5 hours of strength, which is usually enough to get you 30 to 50 pips of price movement. So some of these pairs I don't leave running overnight. So we'll look at the weak euro, strong pound. You want to sell this. Earlier today when the euro was weak and the pound was strong, you can see straight down. I have this nice little pullback here to short, small profit there, short again here, and it just kept going and going for hours. You have the Euro CAD you want to sell as well. Notice, let me zoom out on this. Notice just straight down. And some of the trades that you might have taken in this one were right here, and your stop was above the high. It went down, kind of went sideways. I would have got out of this with a small loss. Short again here, nice big profit, and you have a nice little pullback right here. And whenever you get a nice size move, the fib targets, the 1.618 fib target usually is the maximum move. So this last trade here, short at 31.45, out at 99, 46 pip profit while risking less than 10 pips. And that's the key to trading. Small losses of 5 to 12 pips and wins that are bigger from 15 to 50 and sometimes 100 pips. Your average win should probably, if you trade based on the systems, most of the wins are going to be small, 5 to 25 pippers. And you're getting an occasional, 30 to 100 pip move occasionally. But your average win should be somewhere between 18 to maybe 30 pips. Your average loss should be about 5 to 8 if you're trading based on our systems. Because once we get into a trade, we yank the trailing stop down in half. Once it moves 5 to 8 pips our way, we move to break even. Once it moves 10 to 15 pips our way, and when you're running these overnight, you have our trailing stops, which very quickly bring the stop to break even. So if a trade doesn't work, a lot of times you have break evens and 2 to 6 pip losses, and that lowers your average loss on trades that don't work. So let's take a look at the Euro Australian, another one that you should have been looking to sell. Notice pretty much straight down, 100 pips. Euro New Zealand, same exact thing, pretty much straight down as well, over 100 pips in this instance. So the currency meter really has you focus on, the best ones to trade. Could have also traded those strong ones against the dollar and the yen. The yen is clearly weaker in the weekly and the monthly trend than the dollar. So if you only want to trade one currency and not have 2 or 3 at the same time, buying the pound yen, CAD yen, and Australian yen are the ones that have the most time frames all going for them. So let's take a look at the pound yen. This is one you'd want to be buying. Oops, sorry about this. I'm going to move this back. There we go. I had to scroll back for a previous day. This was one that you wanted to be looking to buy. And when it's underneath the hourly, you don't really want to buy it. Once it goes back above the hourly, you might have bought it here. It didn't really pan out. Bought it here. It went up about 15 pips. Came back down and found support. You got in it here at 19, out at 43. Not the biggest wins in the world. Let's take a look at the Australian yen. Keep in mind the yen was weak for about an hour, then had about an hour of strength, and until about 10 had a pretty decent weakness. Here's the CAD yen from 4 to 10. You can see it went from about 82 all the way up to 82.50, so it went up 50 pips. There were plenty of trades to be had in there. Let me see what else we have. The Australian yen from 4 to 10. Notice this one went back above the hourly here, 23, all the way up to 44. Went up 20 pips, pulled back, found support to hourly. Might have went long here and lost 10 pips. Went long again here, 24, maybe out at 28. And then when it broke out the third time, you're in here at 30. You always want to draw your fibs on the last wave to get an idea of where it's going to go. Notice to the pip is where it stopped. So I always exit half the trade there, and then I let the trailing stop get out of the other half. So my exit personally would have been somewhere around 55 on that last one, and this at 30 or 31, 32 for a nice 25 pip win. So if you have a 25 pip win, 5 pip win, that's 30 pips a win. Divided by 2 is 15 pip average win. And, you know, let's just say you even had a 10 pip loss on 1 out of 3 trades. You know, still your win versus loss ratio is 1.5. I like to shoot for 2 times bigger wins and losses, and that way you can take every trade you see and you don't have to worry about whether the trade's going to work or not. It takes a lot of stress out of pulling the trigger because it doesn't really matter if the trade doesn't work, because you'll always lose small amounts of money if it doesn't. Another weak one today was the Swiss, pretty consistently weak all day. The monthly trend is up, however the weekly trend was down most of the day. I care more about the weekly and the daily and the real time than the monthly. The monthly has very little impact on whether I take a trade or not personally. Sometimes I'll use it to decide whether to trade, significantly more lots than normal, sometimes 30 to 50% more than my normal trade size. If all the time frames line up like the pound, I'm more apt to go in big, because I know I might have a loss or two that, because I'm trading big, will be big, a big loss dollar-wise. However, if I catch a 30 or 50 pip win, I'm going to hit a home run, and that can really make a week. So let's take a look at some of these pairs against the Swiss. Australian Swiss, you want to be buying it straight up about 100 pips. Pound Swiss, pretty much straight up. And later in the day, I think from 9 to 11, it showed some weakness, as you can see, but then it went up again. Australian Swiss, New Zealand Swiss, and I think I may have already showed the CAD Swiss, but I'll do it again. You can see up. So again, the currency meter really, in my opinion, makes trading a lot easier, especially for new traders. You can learn all of our advanced Fibonacci, support resistance, and the dozen or so systems that we teach in our Forex classes over time, but just trade this way until you pick those up.